Hey there, we're starting a new series over the next 10 weeks to highlight the certain features and benefits of different loan products. And today we're starting out with something real simple on the conventional loan side. And we're talking a little bit about mortgage insurance and seller assistance. So, if we start with mortgage insurance, a lot of people feel that mortgage insurance is something that's charged to borrowers unnecessarily, when in fact, you can't get a conventional mortgage with less than 20% down without insuring the lender against default through mortgage insurance. And it's not something you pay for the life of the loan. It's something that you pay until you've met the criteria for the mortgage insurance program, which is typically 24 months. And you also have to be able to prove to the lender that you've established 20% equity in the home. So it's a necessary evil. It's also incredibly affordable. There's different types of mortgage insurance. There's borrower paid monthly, which is the most popular type, and that's something that's just paid monthly until you can prove that it can be eliminated. There's also called borrower paid upfront premium, where it's a one lump sum payment that's included in your closing costs, and then you don't pay it monthly. And then the last one is called lender paid mortgage insurance, where the lender pays it by charging you a slightly higher interest rate, and then also eliminating that from your monthly payment. Um, Things that go into determining mortgage insurance are going to be things like your credit score, obviously, also the type of conventional loan program, and the percentage that you're putting down. Also, along with that, your debt to income ratio. So, if you have a strong credit score, even if you're just putting a little bit of money down, but you have a strong credit score and a low debt to income ratio, you'd be surprised how affordable mortgage insurance is. In addition to that, seller assistance on a conventional loan is money that the seller agrees to give you to help offset your closing costs or to allow you to buy a lower interest rate. There are some guidelines that go along with the amount of seller assist that you can get. So, for instance, on an investment property, you're limited to a maximum of 2% of the purchase price, regardless of your down payment. If it's an owner occupied property with less than 10% down, you're limited to 3%. And as we go up in down payment, you can actually get up to 9% of the purchase price of the home towards your closing costs. The seller assist is something that usually gets negotiated at the time of the contract. So if you're short on funds to close, or you're trying to preserve capital for home improvements, or you just don't want to liquidate your savings account, seller assistance is a great way to make that purchase more affordable. So keep in mind, with conventional loans, two things you always want to know about is, what is my mortgage insurance payment every month? When can I get rid of it? And how is it calculated? And then in terms of seller assistance, whether you're applying it towards your closing costs or towards buying a lower interest rate, there are guidelines that limit how much you can get from the seller, regardless of what you've already negotiated. If you have any questions, you can reach out at AndyLoan.com.